First of all, the Fed, second day of meetings today, so they should announce an interest rate increase of 0.25% on the Fed funds short-term rate 2 p.m. In the event that they don't raise rates, which seems unlikely, market could go a little bit nuts. But things come in as expected. I put in the notes the most common pattern, which happened last meeting, was a test of the intraday high and then a pretty hard sell-off. So if we catch a bid this morning and we're up in the 280 area, and then we kind of drift in the range and the meeting starts, we pop up, test the high, maybe take it out, get back down below it, then I would look for a hard down move back to kind of this support from the last couple of days, 278.25, which had been this high here from a few days ago. In the event that something more unusual than that happens, meaning we go down a little bit harder than expected, and then come up and bounce and don't get back above 279, and then get below 270, let's say 760, like here, then you can look for one of those crazy moves where we drop like $3. It's happened a couple times in the last year, certainly. So I put that, I don't know, 1 in 5, 20% chance of maybe happening. So not likely, but just you want to be mentally prepared. And it would be up move first, down move, took out this, instead of like down move here where it's supported, that would be more normal. Down move takes it out, comes back, comes into this area here, support from the last couple of days, fails, gets below the intraday low, and then just all hell breaks loose. And that's where you would see people on the desk piling in on the short side. Just let it play out. IWM. So IWM kind of failed. I've been targeting 168 for a while, for weeks. And it got almost there in the morning, came off $1 in the afternoon, and then we're right back up here again. But I think now in IWM, we can work against this area here. Just say 167.80 to 168. Let's see if this holds. And then the support is this, just extend this out. Kind of where it spiked down to before reversing at the end of the day. So any type of consolidation outside of these bands, we look for a bigger move. Takes this out, starts holding here, we look for a move back down to here. Takes this out, holds above, people will start thinking about 170. All right, so let's move through this quickly. So federal judge ruled yesterday in favor of AT&T Time Warner merging. Initial move, well, first of all, coming into, we want to see how people were positioning coming in. So I think most people expected, just based on how the trial went and the case law, that it was going to get approved. And so people seemed like they tried to get out ahead of this and buy the few days coming into the ruling. So they kind of broke out from 32.80-ish and went up to, before the announcement, 34.5. This was kind of people buying it ahead of the ruling. And then when the ruling came out, I had a bid down here. So this day here a few days ago, where it went from 33 to 34. Got hit. It very quickly went back up. You can't even see it. If I zoom in, I guess you can see it. So after getting hit here, you can see the big green bar came all the way back up to 34.5, got out of 80, 90% of it. And then this morning, sold some more. I've got a few shares left. I want to see basically, what does this do in relation to 33? Does it start holding above 33 again and top to this kind of first obvious resistance? There's a lot going on here behind the scenes. I think a lot of people were positioned long in Time Warner, figuring even if the deal didn't go through, the assets are really valuable. Now that the deal is approved, what you would have is, there's a deal spread there still. So you could have people shorting AT&T, more people getting long Time Warner, trying to capture that deal spread that still exists, which is, I'm not sure exactly what it is now, obviously a lot narrower, with T dropping and Time Warner going up. So that creates pressure in downward pressure in T. But I still think, there would be people stepping in. Certainly, this 3260 right here, which had touched it in the pre-market. This is the first spot where I'd be looking for people aggressively buying. But if it did pop on the open quickly up to here, I'd like to short it into this. See if it rolls over again. I would only be long at above 3350 if, like, after the first 15-20 minutes it was just consolidating up here and then moved sideways for a while and then broke to the upside, something like that. There's going to be a lot going on. It's very liquid. It trades 30 million shares a day. You'll never have to risk more than 10-15 cents in it. Pretty much because of the liquidity, you can have as large a position as you'd like. The next one is in HRB. From the headline numbers and the dividend raise, it seems like it's down too much. The only thing that I saw was the 400 closures of locations. So maybe people think that longer term they have some issues with that many locations closing. Just looking at the chart, it does seem to just wildly gyrate up and down in this $4 or $5 range. So you can kind of see a bunch of times it's spiked up to 28, 29. The down move started from the mid-30s, came all the way down to 20, and it consolidated between 20 and 24 for a while. 24 is big. I mean, that's where it is right now in the pre-market. You can kind of see if it starts to hold below this band, there isn't much support until closer to 20. What I put on the sheet was it flushes below 24 on the open, goes a little bit lower, kind of down to this area right here. And if it gets back above 24, maybe it bounces after the open. If it's consolidating below 24 and then breaks below 23, there's just, and this is, I don't see anything reasonable to do that. I'm just saying from a technical standpoint, that's what you could potentially see. I mean, it's already down $5.50 down here. My first thought is to look for some type of putting in the low right on the open and $1.50, $2 bounce, something like that. Just didn't like. I mean, this is just from a pure technical standpoint, it just looks awful. I mean, here's the down move in the after hours yesterday. It has not been able to hold above 24.50. So that would be the first thing. That would get me more bullish on it on the upside. So it clears this area, starts to hold up here for a bit. Next one is PVTL. So this is a thinner stock. It's a recent IPO. The numbers were really good. The interesting thing about this one is the IPO was not a hot IPO. They had to price it in the middle of the range. And so here's the IPO here. I think it priced here. And then it does cloud services, which has traditionally been a hot area. It got above 17, consolidated for a while, put in a top at 19, came back down, tested this, and then ran up ahead of earnings. So somebody had an inkling that the numbers were going to be good. I'm sure the SEC will look at that. And so you would say, oh, it's run up into earnings. It's already up, 20% in the last couple of weeks. Maybe people will fade it. But the thing with a recent IPO is you have these supply-demand dynamics. There's not a lot of shares floating around. And so we saw that with like IQ, where IQ broke to the upside, went up way too much before coming in. So you might see that here. Maybe it goes up another couple of dollars from here before coming in and eventually revisiting this uptrend that's forming. Kind of see how it's getting more vertical, moving away from this trend that's forming. So 23.50 pre-market where we're selling. It's already done 200,000 in the pre-market. It's going to do at least 4 or 5 million shares, I would think. So the way to look at this is if it's above 2350, people are going to be long it, chasing it, pushing it. If it fails above 2350 and then starts to hold below 23, you can look for a move all the way back to after hours support here around 2175. The next one is Fox A. So Fox A is supposed to merge with Disney, but now that the Time Warner case is out of the way and got approved, Comcast is supposed to be coming in with a bid today, 15% above where Disney was bidding. Here's the longer term on Fox A. There is a little bit of a halt risk on this one. In case Fox comes out and says something, in case Disney comes out with a different bid. There's a lot going on here, but you can kind of see it was a mid-20 stock. Then the rumors started to come out that there was somebody who was going to buy or bid for them. And then made a new high. So it seems like this could get to $45 today. And eventually, if there's a bidding war, it could move closer to 50, which is incredible. So it spiked about 44 twice in the pre-market. You want to keep an eye on that after the open if it's holding above 44. I don't see it coming in too deeply because it is going to get that higher bid. Let's see how much it was priced in. Let's see, $40. Yeah, I think it's going to have a lot of trouble coming much below this. I mean, maybe it could come into the after-hour support here, 42.50. I think I put on the sheet 42.50, then 41. I would put a 10% chance that for some reason it would come down here. More likely, if it started to sell, it would come into this 42.50 right here. And then any type of, the sellers in control right now. Sellers in control. Sellers in control. Look for volume, a break of this little mini downtrend. Hold above pre-market high, play it for move up closer to 45. Then the one that is going to potentially bid on them or is going to bid on them, CMCSA, this is getting hammered. So this one's already come off quite a bit from the high. I look at this one as actually a longer, for those of you who are longer term, as a pretty good longer term investment down here closer to 30. It's 30.85 in the pre-market right now. Hard to see it going much below this area right here. The issue is how much are they overpaying for these assets, but they need them. These networks are distributing, providing broadband need content, or they do to compete with Netflix and Disney for that matter. And Comcast, that's why they bought NBC, and now they want to try to get Fox, which put them in a strong position. The market right now is thinking they're overpaying for those assets and is hitting it down to this recent support, recent low. So I just want to show you recently what it did. So it spiked down on this day here to 31 and change. And then it put in a low back here on May 31st at 30.70. So it looks like at a minimum this is going to be tested. I put 30.50 if it's like kind of spikes through 30.70. There's always a lot of institutional bids at the half and the whole number. Goes through 30.70 down closer to 30.50. And then you'd want to see it get back above that level and see if it could bounce back up maybe to here. Now above that would be this area here. Did I put that on the sheet? I put 32, but it's like 31.90 to 32. Support from the last few days. Right now, sellers in control. This is another one that's really liquid. Penny spread, trades 20 million shares. Actually, it trades more than 20 million. Why does it say 22 million on my platform? Says 22 average volume. I guess it has moved down in the volume, but it can easily trade 40, 50 million shares today. So that bottoms here, like goes through 30.70, gets back above. Then you want to see how does it act at 31? Does it get rejected there? Does it but hold higher and then gets above 31? Starts to hold above 31. Play it for all the way back to here. And of course, because it's so liquid, if it's holding below 31 and you want to trade it short, absolutely can do that. And finally, the last one was BITA. Had 28 as inflection, 30. What I got here? 30. Yeah, this is resistance. Obviously, it's already bounced from this 28 area, so there's nothing. Yes. All right, so when I got to the office, it was actually down at 28. So it's a Chinese name. It's a thinner name. I just wanted to put it on here because there's some pretty clear support and resistance areas. And it also had run up coming in. So again, it was $22 a couple of weeks ago. Then it ran up to 27, 27.20, something like that. So it's like a 35% move in like a week. So, I mean, any type of failure in this 30 area here, you could walk into a move right back down to this 27.20. So you're talking about 20, 30 cents of risk for $2.5 to $3 of upside. That's pretty good. So that's why I put that on there. Next one on GLMD. GLMD, I thought behaved really well yesterday. Initially in the pre-market, when the news came out, it looked great. Focused on the long side from the initial pullback to like 18, and then it started to move higher. So I think got long here coming into the morning meeting. Wasn't really focused on it because obviously I've been talking to you guys, but was really clean. Then got above the pre-market high and went up another $5, I think, almost. Yeah, $5. And then the negative news flow started to come out from some of the biotech analysts. And my thought process was, if this thing comes off a couple of points, gets below 25, short it on a pop back up to 25, and then just focus on a move back down to $20. It did that. So I can't remember if I shorted this pop here to 24.30 or not, if I was already shorted from here. But then it came off and I covered it into 21, moved sideways again. It broke to the downside, so there was another good short off of this consolidation break. And I shorted this retest back up here at 21.60 because of this couldn't get above $22 here. And like that was it. That was probably one of the better entries of the day, shorting right here. And it just continued to trend down, covered it into the close into $18. So looking at it for today, I think 20 to 21.5, if by some miracle it came up to here, would be a phenomenal entry. The more likely spot is 19. Did I put that on the sheet? Yeah, I did. So I put 19 and 20. And 17 pips. So this is kind of the area to look to play for me today. If for some reason, it goes up strong on the open and spends like an hour up here just consolidating and gets above $20, certainly can look for it to get back to 21.50 to 22 here. But my thought is it should more likely to fail in this area than do that. But be mentally prepared, as always, flexible. Play, this one, it was interesting. Like, it shorted it here on the open, came off a couple of dollars, and then you probably heard me cursing. I was having trouble getting the shares I wanted. So I think I got a little bit, and then it popped up again to 55.5, and I was going low offer. I couldn't get it, and then it dropped like $2. So it didn't really have what I wanted. Came back up to 55 later in the day. I think I had some offers that got taken here. I didn't even realize I was up at 55.5, so I got short here, didn't know. And I didn't even know when it went back down to here. I covered it right at the end of the day, because it was closing strong and it had been accumulated all day in the mid 54s. So to me, it's just 54 by 56 now, with buyers potentially stepping up to 55. And so just watch 54 and a half, 55, see the spot there. If it starts to hold above 56, then there's really nothing till 57 and a half, 58. And then finally, Restoration Hardware. This is one of the craziest up moves in a non-tech stock I've seen in a while. I thought it had a chance at failing in the 150 or a little bit above it. And I shorted it there, I think. Got to 52. came down like $2 from 52.5 to 50.60, and then took out the high, went to 56, small pullback again, and then had just a vertical move to 64. And this was pretty normal, this pullback here. You asked me at that point, what do we do the rest of the day? I probably would have said maybe make a lower high, and this seemed pretty normal. I was surprised it came all the way back down here. So it ended up coming off $10 from the high, which is, that's half of the move of the day. So, this is $10, and this was $10. I still think the amount that was accumulated here, this much stock being bought late in the morning, I guess it's heavily shorted, so that could be part of it. Bodes well for a retest of this area up here, maybe higher prices. So, but if it fails to get above 158 today, or even 156 would be the more aggressive selling pattern, and then took out 152 and closed below 152 today, I'd become more bearish on it. It's a difficult stock to trade. You have to risk at least $1. So but this is the spot right here where it broke down from 157.5, got below, came back up, tested it, and then came off $3, then came back up to it at the end of the day and got hammered again. That's a spot where you want to look to see if they're sellers. 157.5 to 158, pretty good risk reward. See if this range plays a couple times. And then 152, fading it, buying it into 152, I think is going to be the way to go initially, first time it gets down there. Our firm is net short right now. So that's a lot of stuff I covered. We still have 15 minutes to the open.
Hope you enjoyed that video. You can actually watch that video if you're subscribed to our Trader 90 before the market even opens. What stocks are in play? What levels in those stocks are important? And how we might go about attacking that stock. That's Steve Spencer, 20-year veteran trader, laying it out there every morning before the market even opens. A really, really powerful tool to start your session off on the right foot. So right now we're offering a trial that you can take advantage of to access this meeting and other meetings throughout the day. We have a meeting at 11 a.m. Eastern where you can sit down with Mike Bellafiore and listen to him talk about what's going on during the morning session, what stocks were in play, what the best trade opportunities were, as well as maybe some things that we're looking at heading into the afternoon session. So I really encourage you to take advantage of that trial.